What's going on, guys? Today on the channel we are covering Micron Technologies. I'm going to bring you into the numbers of this company so we can figure out what this company is doing right, what they're doing wrong, and we'll find the intrinsic value of this business. So here's the analysis, folks. At the time of recording this video, Micron's price is $56.93. This company's stock price has been down over the last little while. Over the last year, from last January 2022, January 10th, it hit a high of $97.36. And as I said, it is currently at $56.93. Bringing it over to the earnings, folks, they have been doing decent in terms of beating their earnings. However, they did miss their last Q4 2022 earnings. And their new earnings for Q1 of 2023 will be reported on March 27th. So enough about that. Let's see what this company is doing right and what they're doing wrong. So I'm going to bring this over to the stock spec software. If you want to get your hands on the software, folks, follow the links in the description box below. I think you'll love it. 7-day free trial. And I'll show you what this software does. This software takes a look at the company's financial statements, so you have an idea of where they stand, and if you have a better idea if this company will be able to survive, 1, 2, if they're strong, and 3, potentially undervalued. We are ranking this company an 8 out of 10. That's a pretty decent score. They're only losing points in 2 categories. One being the net income being lower in the last 5 years, and 2, the free cash flow being lower as well. Those are 2 categories that I'm not too thrilled about in terms of losing points. Ideally, my favorite categories obviously are the revenue growth, the free cash flow growth, and net income. So 2 of those 3 categories are getting hit. However, there's a lot of other things that they are doing right. Their price to earnings ratio on a 5-year average is incredibly low. It's 10. It's just 10, which is incredible for a technology company. Usually when you see a technology company with a price to earnings ratio that low, 1 or 2 things have occurred. Either it is in a value territory or it's in a value trap territory. Very, very fine line, and we're going to figure that one out. The current ratio, however, is incredibly high. It's 3.51. Now, ideally, we want to see this number between 1.5 and higher, and we're well above that. So that should give you peace of mind to know that Micron Technologies has enough assets on hand to cover those liabilities. The return on equity is high, so if you're a shareholder, it's sitting at 19%, where we want to find companies that sit at 15% or higher, so you can sleep easy at night. Their EPS growth is up over the last 5 years by 681%. Guys, that is phenomenal. They have a low debt to equity. Their share dilution is down. So that means they have been buying back shares. Super important. We want to find companies buying back shares and not increasing the share count, as well as I said, their return on invested capital average is high at 18%, and the revenue growth is up. So like I said, they are only getting docked in 2 categories: their net income and the free cash flow growth. So in the free cash flow statements here, you can kind of see where things are kind of get a little bit rocky. So for the calendar year 2022 that's been reported, and they filed it at just pretty much in October, the free cash flow reported was $3.11 billion. Now this is a company that I've analyzed in the past, and their free cash flow has been pretty rocky. Take a look at this, guys. Back to 2018, you're looking at $8.52 billion. Even in 2017, 3.42. So we've had a major increase from 2017 to 2018, and then a slow decrease, and it's been pretty much an up and down ride with this company. So ideally, what we want to find, folks, is companies that have steady growth in their free cash flow. Mohnish Pabrai, a very prominent value investor, he's made billions. He is a phenomenal investor. He owns a lot of this company, and it's easy to see why on the financial valuation side, because they have such strong balance sheets. However, the only problem that I have with this company thus far is how rocky their free cash flow has been over the last decade. As I said in the statements here, it's increasing, but as 1 year increases, the next year's a decrease, and then it just keeps kind of zigzagging its way up. Now, the net income is down, something I don't like to see. However, like even if look, you have your net income right here, $8.69 billion in net income for 2022. However, you scroll it back to 2018, $14.14 billion. A very interesting statement from Micron Technologies. That being said, folks, 8 out of 10 is a fairly solid score. The revenue growth is still going up. If you can stomach the infrequent, or rather rocky road of the free cash flow, this might be a company to potentially get in on, considering the huge demand of chips. That's something I've been bringing up with a lot of these companies, Intel, Micron, AMD. There's a large demand for the chip market. However, what is the price? What should we be paying for this company today? So in order to figure that out, I'm going to use the price analysis section here. I'm going to do a 10-year analysis. I'll fill out these boxes that are 3 different assumptions, and we'll figure out what we should be paying for this price today. Current price, $56.93. Let's see what this company's worth. If you have been enjoying the video thus far, hit that like button and subscribe button. It means a lot to me, it means a lot to the channel. I'm going to switch over to the next screen, and you are going to be very surprised, folks. Take a look at this. $56.93 is our current price. Average calculation comes out to be $69.23. Why is that? With pretty conservative revenue growth numbers, and this is me being conservative, folks. If you're new to the channel, I'm a fairly conservative value investor. I like to try to take the numbers that I've seen over here on the historic averages from this company, and then utilize historic some conservative numbers to try to give myself as much margin of safety as possible. 7%, 8%, and 9% revenue growth going forward, with profit margins roughly in that range with a slight haircut. I like to try to stick between the 5 and 10 year numbers, because usually they are in a lower bunch because the company's still trying to grow. Now, price to free cash flow, same thing. I stuck below 20, and because 66 is just an astronomically high number. And price to earnings ratio, we've shown 10 pretty much as our average for our price to earnings ratio. However, I'm going to hover around that number as well. So the aggressive category, I'm going to stay around 10. Currently what we're currently been doing, and then discount it even further for our conservative moderate. But take a look at this, guys. $69.23 is what you should be paying for this company today if you want to be making a 13% return per year. That is better than the S&P 500 index fund if you were potentially holding just that. Now, what I want to see is these conservative numbers light up. Right now, on a conservative average, it's sitting at $53.23. $56.93 is not too far off, and I believe we got, well, pretty much late 2022, we hit $49.11. The stock price has gone up by quite a bit, but we were in that conservative average right there, very close to the DCF calculation as well. So what are my thoughts on Micron Technologies? If you can handle, like I said, if you can handle that bumpy road with the free cash flow, this company might be a buy for you today. Now, what do I think? I think you should make a decision for yourself, do a deeper dive in the research, take a look at this software, folks. I've only used the pretty much the front end of the software. We have access to the latest news articles surrounding this company. So if you want to get more in-depth analysis, this is the one-stop shop for all of that. And this software essentially pays for itself in the amount of return you will be getting over the next 5 to 10 years from holding on to great quality businesses. Anyways, folks, that is the video. If you haven't done so, hit the like button and subscribe button. I will see you in the next video. Thank you so much for watching.